Here we go. Shopify's earnings, it was an A minus. I graded them at an A minus income statement here. Subscription solutions went to 563 mil from 444. We had merchant solutions go to 1.48 billion from 1.25 billion. So total revenue for the quarter was over $2 billion versus a little under 1.7 in the same quarter last year. As far as gross profit went, that went over $1 billion for this quarter versus $835 million in the same quarter last year. Look at their expenses. They dropped R&D. They basically cut it about in half. I mean, that was incredible, right? General administrative, they cut that in actually over half. Like, that's insane, over 50% down year over year. So Shopify's put themselves in a lean position. And the incredible thing about this is Shopify's still growing at 20% plus clips, even with all this cutting of G&A, all this cutting of R&D, right? And sales and marketing wasn't like it went up that much year over year, right? So they're clearly running their business on a high level now. They must have had definitely some bloat in their business, and they kind of did a meta situation here. Total operating expenses came in at 804 million versus 2.4 billion for this company in the previous year, right? If we look at income from and keep in mind a big part of that was that one-off there, like 1.3 billion. Income from operations, 241 mil versus $1.6 billion loss. Now this is important here, net loss or gain on investment, they had a $120 million net loss here. So that kind of hurt profitability. If it wasn't for that, the numbers would have been even much better when it comes to net income. But net income came in at $171 million, came in at a diluted 13 cents a share. These results ended up being pretty far ahead of what a lot of folks were expecting out there on Wall Street. And so really good numbers from Shopify. Shopify, as I told you guys before these earnings, I've been talking about Shopify for weeks now, right? If not months. And this is one of those stocks you just buy and you buy and you buy. Sure, Shopify was a better buy yesterday at $53, right? But at 63, it's still a buy. So it's a really easy stock to just buy, add more and more and more of, and just hold for the next 5 to 10 years. It's not, it's not the most complicated company in the world. They're just a 20% plus grower a year, and they're growing their bottom line at a much faster clip. No, a little bit of a hidden stock here is Revolve. This stock obviously made a ridiculous move here today, 30% plus, right? But with Revolve, a lot of important things are going on here that are changing this business model. So if we look at revenue, first off, they grew revenue, which is an exciting step in the right direction. Okay, that definitely helped. Cost of sales, they kept that pretty in check. Gross profit went to $152 million versus $147. Revolve's a really small market cap company. So $5 million is definitely a good up on a year-over-year basis for gross profit. Now look at operating expenses. They brought fulfillment down a little bit year over year despite revenue going higher. Additionally, selling and distribution, they actually kept that in check as well. That was down slightly year over year once again, even though revenue was up about $9 million year over year, right? Marketing expense, they brought that down significantly. Look at that, from $51.4 million to $42.9 million. Now keep in mind, even though they brought down marketing so much, they still grew revenue, which is very good, especially in this weak consumer environment with consumer sentiment where it's at. That's so positive. G&A, general administrative, that was the one kind of trouble spot I saw for the company. That was up about $5 million year over year, so I didn't like that. Total operating expenses for the company was down year over year. So here's the deal. If your revenue is going higher, right, but your operating expenses are going lower, your profitability is going to explode to the upside, and that's exactly what happened here. Income from operations, 16.4 mil. They had a kind of a benefit here of $4.2 million. So if you look at income before income taxes, $20.7 million, and net income over $15 million. Now it's versus 7.3. So they over 2x their bottom line net income on a year-over-year basis. Phenomenal. Diluted EPS 21 cents versus 10 cents in the same quarter last year. So really good results from Revolve. What got me through Revolve to keep holding the stock even through some dark days over the past year with how bad consumer sentiment's been? One, the business model. Two, very important, the management team. These two, co-CEOs of this company, they've done a heck of a job. They built this company from a nothing company, obviously, right, into what it is today. Sometimes you just got really good CEOs that they're going to go. All businesses go through a tough time, right? But there's certain CEOs that they can't get the company out of a tough time, and they just get stuck in that tough time for ever, it seems like, right? Under Armour seems like it's been that type of company. And then you have certain CEOs that are so good that when their companies go through a tough time, they come out of that tough time and they emerge as even a stronger company than when they went in, right? And when I look at Revolve and I think about how bad consumer sentiment's been in e-commerce kind of market and sales for the past year or two, and how much the consumer got hit by inflation, right? I look at a Revolve and I think this company's going to emerge a much stronger company coming out of this as consumer sentiment improves in 25, 26, and in future years, right? As the consumer sentiment comes back, Revolve's going to emerge as a much stronger company than when they went in. And you're going to see that net income, that revenue reach all-time records by far and away, is what I see here. So Revolve, this is another one. It's like, okay, yeah, it was great yesterday at $17, $18, but 23 is still a joke. Like, this company, in my opinion, will go back to new all-time highs. And all-time highs are a long way from here. All-time highs for the stock are in the 80s, okay? That's where I see this company going back to in future years, especially given this earnings report. This made me feel much more confident about that. So, hey, I want to thank you so much for watching that clip here today. I hope you really enjoyed that one. What you're looking at right now is 1000xstocks.com. 1000x does not just show you a billion different metrics that are completely irrelevant. It's curated, mandatory metrics, advanced metrics, curated for long-term investors, not for traders, so you can understand a company on the highest level possible, how it operates, and most importantly, making judgments on whether you want to invest capital into a company or not. Understanding the upside, the downside with companies. Is that company worth our investments, or shall we keep our hands away? So how you can access 1000xstocks.com is you can go to the description area of this video, or you can go to 1000xstocks.com, apply for access to the service. Alrighty, so the first of these two stocks is the Honest Company. This company's been on a comeback, and the comeback continues, okay? It's up 8% after hours. Don't be surprised if it's up a whole lot more than 8% tomorrow. Here's the deal with Honest, okay? Right, before I even got to the numbers, I already knew it was going to be great because I just saw the headlines and I'm like, what? Raising full year outlook. I saw achieved record revenue up 10%. First off, analysts were at, you know what analysts were expecting the company to grow revenues for this quarter? 3%. 3%. The company comes in with 10%. I was like, oh baby. Improved profitability with gross margin of 38%. A 1,120 basis point increase year over year. I call this management team, and Carla specifically, the magicians, because I've never seen a turnaround happen this rapidly in a consumer goods company like this. This is incredible. They raised their full year 2024 revenue and adjusted EBITDA outlook. Phenomenal. Now, in terms of their income statement here, they went from $84 million in revenue to $93 million of revenue. Cost of revenue went down for the company. Down for the company. How do you increase your revenue that much and your cost of revenue goes down? Like, that's, I'm telling you, this is stuff that almost never happens. Incredible. Went from $61 million cost of revenue down to $57 million. Gross profit exploded to $35 million from $22 million in the same quarter last year. Selling general administrative was a little trouble spot for the company. That was up about $1.4 million year over year. Marketing spend, they are spending quite a bit more on marketing, about $1.3 million more on marketing there. Research and development, R&D, $1.7 million versus about $1.6 million the same quarter last year. So total operating expenses went to $39.6 million from $36.2 million. Operating loss was $4 million versus over $13 million in the same quarter last year. And as far as basic and diluted EPS, 4-cent loss versus 14-cent. This is the highest grade I could give to a company that loses money on the bottom line. Like, that's incredible. That's as good as it gets when it comes to a company that has a net loss on it, right? Now, company also ended the quarter with $37 million in cash and cash equivalents and $19 million increase from this point last year. The company has no debt on the balance sheet. Whew, that makes me sleep well at night. No debt and all that cash, let's freaking go. And this is a small market cap company, so 37 mil is a large number. As far as the outlook goes, they raised their outlook. So revenue, now they're talking about mid to high single digit percentage revenue growth. Before they were talking about low to mid single digit. So low to mid single digit, that's kind of like thinking like 2 to 7% range, right? And as far as adjusted EBITDA, now they're talking about 15 to 18 million. Before they were talking about positive low single digit to mid single digit. range. So that's like a 2 to 7 million. So huge increase in adjusted EBITDA. Now, in terms of adjusted EBITDA, this is important to look at, right? Because you see the company has a net loss of $4 million. It's not really what it looks like. And here's why. They had stock-based compensation in the quarter of $8.9 million. Now, stock-based compensation, you dilute shareholder value a little bit, but that's a non-cash expense for the company. It's not like that's a cash expense where the money's got to come out of pocket. So if you're wondering how's this company's cash balance keep going up and they have no debt, right? These are the sorts of things that are very important to understand. Like, this is a non-cash expense when it comes to stock-based compensation, right? Also, CEO and founder and CCO transition expense, that was about $700,000. That's more of a one-off type expense. So their adjusted EBITDA was actually positive by about $7.5 million year over year versus a $4 million adjusted EBITDA loss in the same quarter last year. So the fundamentals of this company are increasing rapidly, okay? The management team has done, I mean, it's incredible. It's incredible how fast this management team has taken this company from like, it was like, man, they might be a bankruptcy candidate. The stock got all the way down to $1, right? And how fast they've switched things in a matter of like a year and a half. Like in a year and a half, like it's like a whole different company now at this point in time. It's a whole different company. And that's why I call them the magicians. It's incredible how fast they've turned the ship around. I mean, my gosh, it goes to show you the importance of a management team. A bad management team can completely ruin a company. A great management team can completely transform a company, and that's what we have going on. Now, the other thing you got to understand about this company is they're about to flip to net income every quarter, in my opinion. They're about to do it. And if you look here, like we can look at the overall 6-month trend, okay? So if you take a peek here, they had a net loss of about $32 million for a 6-month at this point last year. Now they brought that down to $5.4 million. So this company's on the verge of going to net income, and then they're going to become net income positive like every single quarter, unless there's some freak like one-time expense or something like that, which is very, very exciting, because then we're talking about the company's just going to start cash flowing bigger and bigger and bigger. And then what they do with that cash flow is up to them. Are they going to start to buy back shares, right? Let's say the stock's still in the single digits. Will they announce a big share buyback? Will they buy out other brands? Will they expand into more opportunities with their own business and continue to reinvest into R&D? There's a lot of things they can do with that money. Will they pay a dividend? I don't think they're going to do that. Will they just stack cash, right? Treasuries are still yielding a lot, so maybe stack cash and just, you know, because I could see how Honest could get to $50 million, if not $100 million plus in cash and cash equivalents very quickly here. And so when I think about the bottom line starting to flip over to that positive net income, right? And then once again, stock-based compensation, the only thing that's been hurting them really as far as their bottom line, right? That's a non-cash expense. So when I look at Honest here, this is about to become a cash flow machine as a company, which is very, very exciting because, like I said, like a year and a half ago, we never thought this was possible. I mean, absolutely incredible for this company. Now, in my opinion, if this company stays on track, if Carlo and the management team keep everything on track, the numbers just keep getting better and better and better. You see that revenue keep going up. You see the adjusted EBITDA keep going up. You see the net income start to be positive quarter in and quarter out, right? Which I think we should get to very soon here. And the company just becomes a cash flow machine, which I think they could become in a very short amount of time. I think we're going to $5 plus in the next few months. Not the next few years, in the next few months, we'll be in $5 plus, you'll see on this stock. And I do believe the stock will be $10 to $20 likely at some point in 2025. I think that's where the stock will kind of be range bound in 2025. $10 kind of at the low end, $20 kind of at the high end overall. You're going to see, in my opinion, a massive move up. Now, if the fundamentals got off track, if Carla and the team, like all this momentum they have going, it stopped and gross margins start going down and revenue started going down, then obviously these prices aren't going to happen. But as long as they keep what is going on, gross margins getting better, right? The bottom line getting better, the revenue getting better, this is what's going to happen in the next year and a half, in my opinion. Like, that's what we're going to see play out. So that's stock number one. I mean, incredible upside here, and it's going to be a lot of fun. As long as they keep this going, it's going to be a lot of fun here over the next year and a half. Next stock up here, man, this stock maybe was even more troubled, but we've gotten past the hardest part now. And from here, it just gets better and better and better. And this stock is the Planet. The Planet's a 41-cent stock here today. There's big changes ongoing. Before I even get into the numbers came out after the bell. I'm going to show you the big changes that are going on really at the Las Vegas Superstore here. It's very important you understand what's going on there because they've made some major changes and it's completely changing how much traffic is coming to that location, okay? Now, this was a stock that used to be an under $1 stock. It went all the way up to $7 at the height of the hype cycle in like late 2020 into early 2021 with the stimulus and all that, right? And obviously today it's back to under $1 stock, okay? So you understand this Las Vegas Superstore location, if you've never been, they've got a ton of room to expand inside that location. And they basically weren't utilizing a lot of the space. Well, that's changed, okay? So I went here, this is probably 2 weeks ago or so, I went to inside the actual store. I hadn't been in a long time. And I was blown away by what I saw. I was like, oh my gosh, like they've made major changes. So now they have a tattoo shop in there, right? That has all different pricing on tattoos, everything from like $10 to $400 tattoos, okay? And this place was busy when we went. I think this is like a Friday night or a Saturday night. We went that particular night, right? And a bunch of people, there was like 3 chairs, everybody's getting tattoos, a bunch of people waiting to get tattoos and whatnot. And that's one of those things you look at and it's like, are they going to make a ton of money off of a tattoo business? No. But the bottom line is this attracts a ton of foot traffic into the planet, which is what it's all about. You want to get more and more foot traffic and have more and more things to sell people in your superstore, right? It's a Las Vegas superstore, they call it. You got to do more than just have Jack Jackson for people to buy when they're there, right? They now have this club lounge open as well, in addition with the bar in the kind of like restaurant space as well, which is pretty exciting opportunity. So just another thing to drive traffic. They still have the same setup they've always had in terms of kind of their machinery and the brands and all those sorts of things, right? The superstores is bigger than it's ever been. It's incredible the size of that superstore. They could do so much volume out now at that store. I mean, literally like, is basically like an unlimited amount of volume they can do there. Like there's nowhere you're going to find a superstore that big when it comes to this particular space, right? Now, this is a really exciting opportunity here. Why are all these people in line here? So what this is a consumption lounge. So basically you go in there and you kind of get a menu like you would going to a restaurant or a bar or something like that, right? And you could order different products. Jack Jackson products, that is, okay? And you get to enjoy them in there. Now, when I first heard about this, I thought it was you were going to buy stuff at the superstore and then you were going to go inside the consumption lounge and then use that product. No, that's not how it works. It's like more of a bar or restaurant type experience where you go in there and then you order this and that and this and that, right? And then you pay and then you leave eventually. So that's something that I've seen that twice now, and every time I go by there's always a line, it's always busy there, so that's very, very good to see. Now they have all this, they're supposed to open up this like exhibition, a Jack Jackson related exhibition, which I'm sure is going to drive a bunch more traffic. They're doing some sort of like filming of a show or something over here, but this is a ton more space that they can open up more and more stuff for, which is phenomenal for this company. And so that Las Vegas Superstore is going to get busier and busier and busier and be more and more of an attraction overall for a lot of different reasons. And then this is going to help the store sales in the end, right? Now, I was close to store last Thursday, okay? And I took this picture from overhead from the store. Check this out. Look at how busy it is. It is incredibly busy. I mean, the Ubers, the taxis, the parking lot. I mean, this is like, considering how bad the consumer has been hit the last few years, you wouldn't think the planet would be able to do business like this. Whew, they're doing business. They're attracting people again. Just yesterday, on Wednesday afternoon, I took this picture as well. On a Wednesday afternoon, you got to understand the strip is like the most dead, usually kind of like Monday, Tuesday, Wednesday, right? And then people start coming in again Thursday, Friday, Saturday, Sunday. That's like busy, busy times, especially for the type of people that would be going to the planet, right? And Monday, Tuesday, Wednesday, the only people that are there for the most part are more like convention type business, right? Thursday, Friday, Saturday, Sunday, that's the masses coming in, right? And that's planet. So this is on a Wednesday afternoon. I'm like, this is busy for the planet on a Wednesday afternoon? That looks pretty dang good to me. So there's fundamental changes going on for their big dog store, their Las Vegas Superstore, which is very, very good. Now, in regards to the revenues of this company, came in at $31.1 million. That was up from $25.8 million in the same quarter last year. That was an increase of over 20%. And they said a month and a half of revenue from Florida helped, and then the Las Vegas Superstore helped, and then the Illinois store also helped. Gross profit increased to $15.8 million compared to $11.9 million in the same quarter last year. The improvement in gross margin was driven by lower cost of cultivation through full utilization of cultivated cultivation facilities and better yields, along with higher portion of sales from owned brands, right? Planet owns a bunch of their own brands, and the margins on that are pretty good, let's just call it, versus selling somebody else's product, right? Net loss for the company was a one trouble spot, came in at 8.1 mil versus 4 mil. Keep in mind SBC and some other things kind of went into that, right? Some other non-cash expenses. Adjusted EBITDA came in at 3.2 mil as compared with adjusted EBITDA at 2.8 mil. Adjusted EBITDA was higher due to better gross margin performance, strong cost controls, and increased operating leverage. So adjusted EBITDA actually up for the company year over year. Now, the other thing is I'm expecting this company's numbers next quarter to be really good, and then kind of moving in the future here. Cash came in at 26.7 mil versus 11.8 mil. Total assets came in at 242 mil versus 151 mil. Total liabilities came in at 84 mil versus 44 mil. So total liabilities was up about $40 million roughly year over year, while total assets was up about $90 million year over year. I will take that. I will gladly take that, okay? So now, I haven't been on the conference call yet. I'm going to listen to that likely tonight. My guess is the guidance is going to be really good, and my guess is the CEOs of the company are going to sound the most optimistic they've been in, my guess is probably years, just to be quite frank. I think this will be the most optimistic the CEOs and the CFO have been in years. It's been a really downer market the last several years for this company and for anybody really in this space, and the reason was the consumer got hit, right? Las Vegas gave a lot of licenses to open up stores. A lot of those stores have faced a lot of troubles. It hurt margins in a massive way, and it was just a down spiraling cycle for the longest time, right? And that's over. Gross margins are starting to pick up now, and the business is trending better and better and better, and also the planet's just executing on a higher level. So I'm expecting a really good conference call. We'll see what happens there.